Hello everyone, and welcome to another edition of Lockdown in Sydney, Australia. We've just seen the big news break today that Evergrande, the Chinese property developer, one of the 500 biggest companies in the world, has managed to find some money to make its bond payments, its interest payments. And really, probably in the long term, that company doesn't really have a problem. It certainly had a cash flow problem that it's telegraphed to the marketplace. And whilst they've made those payments today, I wouldn't assume that Evergrande is out of the woods just yet. I think there's some difficult times ahead, and there could be some form of government support or some form of fresh raising of capital to solve the problem. So we're likely to hear more about that, but the market had an immediate rally. The Australian market just loves to buy on any excuse whatsoever, and it certainly did that. But the US futures markets, they did the same, but they're already getting sold off. The Australian dollar did the same, spiked on the news, is already getting sold off. The euro-dollar exchange rate barely changed, and gold has continued to firm. So I really think the Australian market is getting a little bit carried away here, as usual, to the upside. It's one of the reasons why it's so volatile, but we've still had a downtrend for a couple of months now. So we do have these kinds of rallies in this downtrend. So it might be nice, and it's a little bit encouraging. And yesterday and overnight, we did see, as I said yesterday morning, that we would have some kind of good rebound on the day, but that would roll over. And roll over is probably the key term of the day. It certainly looks to be the case for US stocks, and it will probably again, and it has been the case for the Australian market. It's having a rally from that rollover fall. It's having a rally to match that, and it will probably kick on a little bit higher in the afternoon. There's got to be a lot of people out there who will think this might be an opportunity to sell, and when that selling hits the market, I think there's going to be a lot of day traders who are caught long the AUS 200. That doesn't mean I'm right, they're wrong. That's just my view. I do think that there are significant challenges ahead for the Australian economy. You've heard me talk about that way too much. Hospitalisations in Sydney, though, are on an ugly trajectory. They're looking very strong in terms of going up in numbers, which will weaken the health system. And hopefully we'll get to that 70% full vaccination mark for New South Wales with some opening up. But so many medical experts in Australia, the head of Australia's Medical Association, the president of the Victorian branch of the AMA, have all come out and said this opening up plan is going to leave our health system badly exposed and needs a rethink. Politicians aren't really listening though, because the people who have it, relatively good in the world, and that's Australians in general, do want to get on with life. And also people have endured a long period of lockdown, and some people in some suburbs, it is extreme suffering, almost like a torture, particularly when I'm fortunate enough to be able to go out and present my work in this location. So that's not the case for everyone in Sydney, and a lot of people, millions of people in fact, have paid a very high price to try and keep these numbers down. That said though, if hospitalisations are too high, when we hit the 70% mark, I can almost hear it now in the wind, the Premier having to say, look, we thought we'd be able to open up, but with hospital cases this high, and we always did say that if the hospital cases were too high, we'd have to respond, so we're just going to have to wait a little bit longer. I hope that doesn't happen, but that would certainly deflate a lot of people and probably bring on a lot of undue mental health stress. So hopefully that won't be the case, but I do need to mention that to you as a possible scenario. In terms of markets, the US dollar I thought was going to have a pullback. It didn't. I thought it might be a pullback of several days. It looks to have only been a pullback of one day. The US dollar is again looking quite firm and stubbornly firm. That's one of the reasons the Australian dollar retraced its rally so quickly. And you'd have to say that euro and the Australian dollar continue to look weak. I still like sterling Australian dollar, and since we started talking about that, it is of course much higher. It's had a little bit of volatility. We decided to buy the recent pullback, and I did say that in one of the episodes, and that's working quite well at the moment, and I think that still is a good trade. It takes some of the volatility of the US dollar movement out of being short the Australian dollar. So long sterling Australian dollar is something to think about. Oil made a new low, but then has recovered in the last 12 hours or so. It's going to be volatile, very difficult to trade. Overall, I think oil is topping out. I've been saying that for weeks, and we've certainly, since I've said it, we haven't had a new high, and we've certainly had a lot of downside, but we've also had these sharp rallies. And I think for oil, we're probably looking at a situation where it could rally $1, $1.50 from where it is now. But if it were to start to tire from there and fall back in, that could be a really interesting thing to look at as a hedge against a slowing global economy. Because that's definitely what we're seeing. No one wants to talk about it, but that's definitely what's happening. It'll still be a good rate of growth for the year, but certainly the party post-COVID is over and we're into another slowing phase. Gold, I've been highlighting for some time as the ultimate hedge against Delta. We had that correction in gold, and I said we'll just let that correction run its course and then begin to buy again. And certainly beginning to buy again is what we've been doing the last couple of days. And I think I would suggest to you now that it's going to be a little bit choppy, but just chipping away, buying small parcels of gold here and there for the long term is going to stand you in good stead over the next 1, 2, or even 3 or 5 years. I think there is a lot of upside there. The US dollar strength, of course, is still people wanting to play risk off by putting their money from the rest of the world where there's been some real economic dislocation into a safe haven US. It's still viewed that way. I think a far more a safer place to put your money is probably the euro or even the yuan, or balance all three. That would be the best thing to do, I would think. But the market in general, 99% of people out there still believe the US dollar is a safe haven trade. That's why the US dollar is strong at the moment, because people are seeing the various uncertainties building, from Delta to inflation, from supply chain disruption all over again with Delta, particularly in Asia at the moment, and various financial risks from time to time, like Evergrande. They always get exaggerated by the market in real time. I remember when there was a $200 million fund in the Middle East, property fund, that was going to go under, and everyone thought that was going to trigger the end of the world. And I said, what nonsense at the time. And of course, it had no impact at all, but you certainly had plenty of market volatility, and it certainly gets a lot of media headlines and focus. And I think we're seeing the same sort of thing with Evergrande. It's a company of far more substantial significance than the others, but still I think it will work its way through the system and end up an okay result, for want of a technical term. So, in a nutshell, let this Australian stock market bounce happen a little bit further, but I would still see it as an opportunity to sell the rally, sell the bounce, particularly if you're still, if you have a general strongly invested Australian equity portfolio, it wouldn't hurt at all to do a little bit of hedging in the futures or the CFDs and the various tools that are available to you. All your own decision, of course, just an idea, So, yeah, I'm worried about this Aussie 200 rally. I think it will falter. I watched it trade all through New York, and it looked tired, and it was rolling over to falter, and it did at the start of the day. It was only the Evergrande news that's given it a boost, and I think that will begin to wane, as it already has for US equity futures and for the Australian dollar, as the US dollar remains particularly firm. So, sell Aussie 200, buy sterling Aussie, look to sell oil on a bit more of a rally. That's kind of my view of the world still. There's no Goldilocks type of situation out of this. In fact, the world is in a stagflation state where we're going to have faltering growth moving forward, and we're going to have ever higher inflation with central banks basically sitting on their hands and doing nothing. It's not a good economic outlook. But that's the minority view. Of course, most people out there think everything's wonderful and all of these things are short term. Well, no. And I also want to point out, and I did in my morning commentary written piece, that inflation, or this may have been yesterday's piece actually, that inflation has probably reached a point now where it stops benefiting earnings in the way it did, because it was price gouging, freedom of pricing. That was all aspect of inflation, not just supply chain disruption. But inflation has probably reached a point where it's now starting to eat into, and that's what I always said it would do. In the long term, it would be a negative. In the short term, inflation would be a positive for earnings. In the long term, inflation would be a negative for the economy and subsequently long-term earnings. And that's what we're starting to see now. We're starting to see these price hikes start to eat into consumer behavior. And as the consumer begins to back away from these higher prices, that's going to exacerbate some slowdown that we're already seeing from the influences of Delta. And also just the fact that stimulus measures all around the world, it wasn't just in Australia, but it was more so in Australia because we had the highest per capita stimulus measures, but stimulus measures all around the world drew forward future economic activity and left a valley of a desert of planned economic activity in 1 to 2 years' time, because it was all happening very quickly, all brought forward. All projects were advanced on all the stimulus measures and tax advantages, etc., that were on offer. So we're in that phase, we're in the hangover phase of the post-first wave of COVID party. This way, isn't it? Post-first wave of COVID party, we're in the hangover now, and we're getting super high inflation, and we're getting another wave of supply chain disruption. It is a difficult and challenging economic environment, and not enough people are talking about it, but we are here at ACY. Thanks very much for viewing. Clifford Bennett, Chief Economist, ACY Securities. Look forward to seeing you in the next episode. Thank you.